Everybody, and my name is Chris the Investor, and happy Memorial Day. And this is my first YouTube video explaining to you guys what to look for when the bear market ends, right? So let's get into it. So first thing I want to show you is this is the S&P 500. A lot of you guys know, some of you guys don't. The S&P 500 tracks the largest and the best 500 companies in America. So therefore, it tracks the overall performance of the stock market, right? So let's go to this job that I have, right? So based on technical analysis, using chart patterns technical analysis is using chart patterns and signals for entries and exits, right? So the market moves in three ways. It moves up, which is the uptrend, higher high, higher low, higher high, higher low, higher high, higher low. And when it moves sideways, that's a situation they call consolidation. And consolidation is indecision between buyers and sellers. I'll show you examples of that more down in the YouTube channel. So now, this is where we currently are in the market today. We're in a bear trend. So we're making a lower low, lower high, lower low, lower high, lower low, lower highs. First, to make it out the bear trend, for the bulls to gain control, we have to make a higher high and a higher low. So let's look at the chart, for example. So this is Bitcoin chart in the cryptocurrency market. So if you notice, we're making a lower low, lower high, lower low. That's a correction. So this is a downtrend. So we're making a lower low, lower high. This high is lower than this high, and this low is lower than this low. So now this means we're trending down. Now this low is a lower low, which is lower than this low. And we need to make a lower high. So let's look at Ethereum. Same thing, bear trend. Lower low, lower high, lower low. Let's see if we got some more examples. So even NEO, which is a growth stock, lower low, lower high, lower low, lower high, lower low, lower high. Now it's a double bottom. So this is the S&P 500. Back to the S&P 500. So the S&P 500, if I remove all this, they also have the same pattern, which is a lower low, lower high, lower low, right? So what is important for you guys to note is the market has cycles, and these cycles do come to an end. So if I zoom out to the monthly time frame, it will show me now each candle equals a month, right? So if I zoom out to the monthly time frame, it's going to show me some of the past situations that happened. So this is the 2000 dot-com bubble. This is the first time everybody thought the internet was a scam. We moved up after that. This is the 2007-2008 financial crisis. Similar to now, where inflation was high, gas prices was high. But in this case, the difference between this case and our current case is there was low employment these times that ended up making the bear market last longer. So the next dip from the chart perspective was the last time we had fear. This was a COVID-19 2020 dip from February to March, this whole sell-off, right? And the market bounced immediately after that. So now, if I remove this again, you could see now we're making another correction, which is normal. So what you guys want to keep in mind is that we recovered after every correction that happened before. And you also need to keep in mind that the US won't let the bear market last long because that's a bad look for the economy, right? So let's focus on the S&P 500. So we created a head and shoulders reversal pattern. This immediately showed me that we're going to go into a bear market for all stocks. We're already in a bear market for crypto, but this is what showed me that we're going to go into a bear market for stocks. So let's look at a definition of the head and shoulders pattern. So before I even go to it, the head and shoulders pattern is a reversal pattern found on the top of an uptrend. So this is how it looks right here. A head and shoulders pattern is a chart formation that appears as a baseline with three peaks, where the outside two are close in height and the middle is the highest. A technical analysis head and shoulders pattern describes a specific chart formation that predicts a bullish to bearish trend reversal, right? And this is the picture, right? So it's the same thing that's formed on the top of the S&P 500. So anyway, we got a reversal. So now after we broke the neckline, we're coming back to retest this support that price broke down as resistance. And I'll give you videos with support and resistance breakdowns down more in the channel. So now we're just retesting. So the answer is, for us to get out of the bear trend, we have to break this diagonal resistance by creating a higher low and a higher high. This will get us out of the bear trend. As long as we stay in this channel going down, we will be bearish. So let me show you an example. Same thing with NIO. As long as we stay this way, we will be headed bearish, because every time the bears are controlling the market, we're not breaking up from the bulls. The bulls are not showing us any push through. So look at this example with PayPal. These are some examples I draw just to show some of the students an example. But PayPal is the same case. Diagonal resistance drawn right here. For us to get out of this bear trend with PayPal, we would need to break this diagonal resistance back bullish. And the bull break would look something like this. So even if you invested in PayPal, you can see that since July 2021, we've just been trending down. So the market's been bearish for a long time. So at any moment now in this summer, June, July, we should get a flip back to the bulls to get a bull rally. So to conclude, in order for us to break out of the bear trend, the market has to break the diagonal resistance and start making higher highs, higher lows, higher high patterns. Until then, we're still in the lower low, lower high patterns for crypto and stocks. Until we get out of this lower low, lower high pattern, we will be bullish again when we do get out. So we need to get out of this lower low, lower high pattern. That's it. Once you understand how the market moves, up, higher high, higher low, higher high, higher low, in the uptrend, and down, lower low, lower high, lower low, lower high, and sideways, which is consolidation. And even look at this example. This is inverse head and shoulders. Inverse head and shoulders shows a reversal from bears to bulls. So I'll show you guys more about these patterns and describe them more as we go by in the YouTube channel. Thanks for watching. Please share, like, and subscribe for more videos like this. I'll be posting videos every day updating you on the stock and cryptocurrency market, so you guys can follow along and manage your investments accordingly. Thanks for watching.